Hi, good afternoon, everyone. It's a pleasure to speak in front of you all. Siddharth gave an extraordinary presentation on the quant side. And thank you, Siddharth. If you're there, you have done my work more easier. I'll take on to the point of how quant has changed the world of investing and what we are doing at Turtle as a very fresh PMS company and a very different approach on investing. My career has been last 20 years developing quants on different platform, and eventually we have developed something which is extremely simple yet extremely powerful, which can create a returns which is exponential and asymmetric to what we have looked till now. So this is what we have done. This is our we believe in turnaround stories. I'll go next. Can you play this? So this is what has been our time invested in last 70, 80, 90 years. We used to give highest time to family in 1930s. Then friends came. Still friends. College came from nowhere. Bar and restaurants were taking over. Friends still had a lot of value. Co-workers were second highest. 98, 99. Online suddenly started to rise up. Friends came second. Online were unbelievably higher. Today, we spend 60% of our life online. 13% with friends, 8% co-workers because we work, bar and restaurant. Thank God we don't have in Gujarat bar and restaurant, so I'll keep it this to Mumbai guys. And sorry, you want me to replay again? Yes, we'll do that. But you have to then tell me that you have to add more 5 minutes to my presentation. But I'll do it for you. Focus on, I'll send this presentation guys, so you be with me. That's why I'm telling you this is also interesting, because what changes in last 60 years is very important. School was 13%, which nowhere is now, like that 12%. So the highest bar was 25, 26% only, because we were very balanced as a society. And online just came and took the whole world aside. 60%. And this is going to rise day by day. The way people are not getting married, the way people are being single, and that's what the investing world will look like when we had only one way of investing, and then one more way, two way, three way of investing comes into the picture. So I'll show you a very interesting data on the data side, is that we did a 20 years, 15 years of research, and you will be surprised that the highest return, if you have not seen, anybody can tell what is the highest, which sector has made the highest return in last 15 years? ID no, pharma no, finance no, consumer, perfectly right. You will be surprised seeing data that market has given 450% return, that is 12% of CAGR, versus consumer durables have given 1600% return, that is 4 times to it. And there are 18 sectors which are listed over here, which is an NSE sector. 50% of the sector has not outperformed the previous sectors, the Nifty 500. The worst is media, the second worst is real estate. And that's what we have seen. And if you see, the stars are all-time high. Every time there is 2 years, except 2011, every sector changes after 2 to 3 years. That is so surprising. And we are on the edge. In last 20 years, 15 years, the companies were not very high. We had segmented, structured, selected companies. Now in last 3 years, investing psychology or investing companies are so as a broader as an aspect that we can invest into so many different companies. I was just reading today that Coal India's, Zomato's market cap is bigger than Coal India. But the dividend yield, dividend what they pay in a year is higher to the Zomato's total profit. But the Coal India's profit is higher than the Zomato's revenue. Now people have forgotten Coal India. People love Zomato. That's the change of the world what we are looking forward for. Maybe we are talking PE today, price earning. After 15 years, we will not talk about PE. We'll talk about business, we'll talk about profits. And that's what the world is changing around. And the next slide is the most important slide I want to discuss with you is this. And that's all our research. If you see in last 20 years, it's 14 times market has dropped more than 10%. 14 times, right? So these are recovery days. So every 1.5 year on an average, market has dropped more than 10%. But the interesting part over here is that after every recovery, the top sectors what outperforms are different to the previous bull rally sectors. And what happens is that, that's the reason if you see in mutual fund PMS, every 3 years, the top performer PMS changes. Because a fund manager has a thought that, okay, these 2-3 sectors will work, and if they work, they are in the top. And once their sector doesn't work, they are not in the top. I'll tell you a very interesting stuff in 2008, if you were there. It took 1890 days to come back to its all-time high. And we say that long term to bahut acha hai. I'm sure a lot of people here would have seen that period. But can you tell that what led to 2008 high with sectors? It was infrastructure, reliance, power, banking, real estate. But if you see, the next rally of 270% was done by auto and IT at 669% and 530%, which was not talked about it in the bull rally of 2008. So auto and IT made the index to come back again to an all-time high. It was not infrastructure, banks and power. And if you see the whole structure, most of the time the sector changes. And that's where the quant will make a lot of point, because quant doesn't have an emotion that, oh, I don't invest in PSUs. Oh, I don't invest in commodities. Quant and RPMS says that I will invest in anything which has common denominator of one thing, and that is turnaround story. So we at Turtle did a lot of research on how to find companies which does all-time high turnarounds. And we wanted to make it simple as silly, it's like Apple philosophy, don't complicate things. So we did something, so our process has been 20 years full simply with speed. We know when to hold, when to run, when to fold and when to walk away, which is a very beautiful song by Kenny Rogers, the Gambler song. To hold north, to sell south, replace east and west is our motto. ऊपर जाए तो बेचो मत, नीचे जाए तो रखो मत, और यहाँ से वहाँ घूमता रहे तो hold मत करो, replace कर दो उसको. And we love our clients, not companies. So we have a process which is no holding bias. We are one of the fund which doesn't invest in 6 sectors. So that are animal killing, liquor, tobacco. This is a no sin fund. So all the people, world outside has a lot of traction on this type of fund. No sector bias, no market cap bias, no model portfolio bias, no averaging loser, no premature profit booking, no falling in love with stock, no entry before exiting, deciding exit, and no complex fee structures. So I have told no to everything I was not happy to run a fund and investing in fund with. So what we have done in the process in last 20 years, that investing in quant is been distributed by 3 segments. First is what is stock selection. 90% of the time we talk only on this. Kya lena chahiye? Second, we don't talk stock allocation. What is the allocation? It's not what you buy, it's all about how much you buy. And third, the most important thing is stock review. After you bought, how much time you are giving to reviewing the stock on a consistent mode. Because buying is very easy. And there is I have a friend, Chetan Bhai, who says beautifully that Rohan, return on investments is ज़्यादा important है ROTI. And what is ROTI? Is return on time invested. That आप वो कंपनी में इन्वेस्टेड ही रहो, रिजल्ट ठीक ठाक आता रहे, पर what is the time you have invested in that? And that's what the stock review process comes into the picture. I'll give a brief about all. So we have made a 5-step clear process of stock selection. First, we only buy stocks at all-time high. And a lot of people say that if you will tell a whole theory, who will give money to you? And what in last 20 years we have understood is the power is not in knowledge, but power is in execution. Second, we buy only company at all-time high profits. Third, very lately I understood that the most important part of a stock is to outperform the index. Because if the stock outperforms, then only my fund will outperform the index. So we buy only companies which outperforms the index. Fourth is that value should be higher than the price. I'll show you an example. And the fifth, there should be a turnaround story into the company. If this 5 process comes into the picture, and believe me, you tell any examples of the world from last 100 years of the most wealth creation company, you will see this company is at all the 5 factors of markets. Stock all-time high profits, outperformance of markets, value is higher than price, and fifth is, of course, the turnaround story. Without 5, a stock to be a multi-bagger or whatever we say, a great story is impossible. We have the process of stock allocation, and that's very, very important. So what we have drafted is that now people will say that if you buy a stock at all-time high, it's very risky. No, it's not. Because if I go wrong in a stock, my stock selection, my stock allocation is structured so quantifiable that the only risk to the portfolio if I go wrong in a stock is 1.2%. So the maximum allocation into 15 stock is 18%. And that's a whole quant which we have kept in video. You can go on website and just check it out. But this is something which is very, very different to any other PMSs which is available in India today. We decide exit before we enter. मैं फट्टू फंड मैनेजर हूँ. पहले मैं सोच लेता हूँ कब निकलना जाना नीचे की साइड, ऊपर की साइड नहीं, because we don't sell what is going north. No model allocation process. So if you are giving fund today and if you are giving fund after 6 months, the whole allocation changes. In last 4 months, our allocation was only 40 to 50%. Whereas in last 1 year back, our allocation was 90-95%. It all depends on the risk management system of it. So we don't follow model portfolio approach in PMS. Allocation is based on the risk approach and dynamic. And yeah, as I told that it's purely on the quant basis we follow. And we tell our clients that, this much of the risk is, like for example, recently we have started allocating from last 1 month. Previously for 3 months, there are certain times we are only allocated 30% of the portfolio. And what we believe is that because we all are money managers in some or the either way, is that client takes at least a pregnancy time to hold with a PMS. After that, he is for at least 3 to 5 years. So that's 9 months of holding a client, and client doesn't like risk. Client doesn't like loss. Whatever we say for long-term investing and healthy food is just a myth. We love talking, but it's very hard to hold on for. And we have a stock review process, and that's wonderful. This is what I'm so proud of what we have created in last 2 years. So now the biggest problem is that holding your profits, exiting your losers, and holding something which is not creating, great value for you. So we have created a process where every week we create a score to our stocks. The first score comes is that if the stock is above our exit price, it gets 1 mark. Second is that if the stock is at all-time high profit at TTM, it gets 2nd mark. And if the stock is third, is that it is outperforming Nifty 500, which is our benchmark now, BSE 500, it gets 3rd mark. So for example, if a stock is 3 as a score, it's to be hold and add more. If the stock is at 2, it goes to the review. If the stock is at 1, it goes to replacement. And if the stock is 0, it goes exit. Now the question is that what could be the difference between 1 and 0? Replace is we only replace the stock when we get a better alternative to it. And 0 is that we don't care there is an alternative or not. We will exit out the stock. So now just imagine as a channel partner, as a distributor, you know when we are going to buy, client knows when we are going to buy, when we are going to sell, when we are going to hold, and when client knows what is going to happen, the longevity of investment in the fund rises to at least 200 and 300%. So I'll give you an example of a company we hold. This is a finance company, power finance company. If you see 16 years, the stock was at the same value, and all-time high after 16 years consolidation went at least 4x. The same time, if you see on the value versus price, I paid a price of nearly about 0.5, and the value I paid was nearly about 20 times more than it. So if you see the PAT of the company from March 14 with 5,400 crores, the PAT when we bought was 18,000 crores. So the price what we were paying was same, but the value was exponentially higher to what we were paying for. That company was available at 2 times of PE, forwarded PE, 7 times of dividend yield, and nobody was interested to see this company. And that is only possible when we have a quant process. Because when we have a traditional investment process, we set up to, a fund manager is set up to be a biased person that, oh, I don't invest in this companies, this sectors or it. But as we have seen in last 20 years, the best wealth creation happens when we are not very confident on a certain part. Right? And there is a outperformance, then there is a turnaround story which happened in a power company and specifically PSU companies. So just an example, not a recommendation for sure. And this is again very interesting. This is from Motilal Oswal report. So this is CY 24 calendar year, 76% of the constitution traded higher. Now if you see the top 10 companies, from there 5 is in our fund. But the last 10 companies which didn't outperform, not a single company is in our fund. Why so? Because all this company didn't match in the criteria of what our fund quant is. But the top 10 companies, the top 10 or 15 companies, nearly about 50% of the companies are in our portfolio. And this is going to happen year on year, because I'll show you how. Sorry, I don't have a slide, but I'll tell you a very interesting story. Way back last decade, auto index did superior. Maruti was the top performer, Hero Honda, Eicher Motor was top performer. Now if you see, in last 2 years, the best performer was companies which didn't do good in last decade. So what were the top performers? Mahindra & Mahindra, Bajaj Auto and TVS Motors. TVS Motors, who happens to be the 4th largest automaker, two-wheeler, have done more better than the largest automaker, Hero. And that only a machine or data can pick up on. How many times you can have a sharp point to pick up the stories on. So if you see Trent, M&M, BEL, Bharti, Shriram, Power Grid. Now Power Grid, a great example. Who sees Power Grid? But Power Grid has been one of the top 10 performer of Nifty. And that's the part of our portfolio. So my friends, I would just like to tell you that for this we have crafted 3 funds. One is Wealth Mantra, where we invest only in leaders. Second is Growth Mantra, where we invest in emerging leaders. And there is no replica of stocks in any of them except ETFs. And third we have crafted for family offices and for big investors is Bespoke Fund, that is Profit Mantra, which is a combination of Wealth Mantra and Growth Mantra according to the thought process of investing you want to craft. So you tell me that you want only 5 stocks portfolio, we can craft for you. You want 40 stocks portfolio, we can craft for you. You want only 2 stocks portfolio, we can craft for you. But this is what we have created. So 2 is a standard PMS, which starts with 50 lakh and Profit Mantra starts with 5 crores, but it is purely a bespoke portfolio. We have just started the journey from 4 years, but in 4 years we have done most of the time we have outperformance. FlexiCap, we are on the top 10 performers of India, but I don't want to tell you that because of my returns you should invest with us, but because of the process you should invest with us. And I'll tell you, recently, yesterday my friend in US had sent me a car picture with their family. They were sitting in Tesla's car without a steering wheel. Can you imagine? And And if they can do that, because all the data, what is Tesla without steering wheel is purely a quant car which is driving without, everything is in there. So why not we can think for a fund where data takes the decision and a fund manager is only driving and making the processes more better. So we have been the top performer by 52%, 49, 40, and index has been 50. And this is just the start. So why I'm telling you this is just the start? Acha, I'll take you 1 second back and I wanted to tell you the story. You know, most of the people feel that when to invest in a PMS. I'll tell you the best time to invest in a PMS is when market corrects 10%. Because recently market corrected 11.5%. 11.47 to be precise, Nifty 500. And now if you see next 2 years or when we meet in the next meeting, the top performers of PMSs and the stock will change completely. So recently if you see in last 1 month what is happening is that now no capex stocks are outperforming. All OPEX stocks are outperforming. And that's what we will see the change in the portfolio. IT was not performing from last 3 years. Now we have seen IT suddenly to outperform. Banks were not outperforming, private started to outperform. And that's where the transition happens. And whatever long-term story we say, client sees that how much returns we are going to make. And in Quant, we can say that in 2 to 3 years down the span, in any market segment, it is bull, bear, or flat markets, we will outperform the markets on a very, very singular point. And we at Turtle have a clear point is that we want to be on the top 10 performers of India, and second, we want to outperform indexes in 5 years span by 50%. And that's what we are working for without any biases of sector stocks. We only invest in 750 companies, that is total index. We don't invest anything below 4,000 crores of market cap because that's the liquidity is an issue. So that's what is from me. I have 3 more minutes to talk for. Let me see that if I can invest or I have something to share with you. So we invite you for making a change in the PMS world by seeing the quant side of the world, and I can assure you the data and the process, if you will understand more and more, you will understand the clarity of the PMS we have. We have 2.47 seconds, 2 minutes and 47 seconds. That's what we do in quant. We save a lot of money. Thank you.
Thank you so much, Mr. Mehta, for unveiling the potential of quant investing. I would request Deepak sir to please come and present the token of appreciation.